I look at real estate like an entrepreneur's savings account. That's where an entrepreneur, like, they make their money, or a doctor or a dentist, like, and it's like they've traded their time for money. They're not going to go throw that money into, I don't know, a speculative, I don't know, ground up development in halfway around the world in a country where it's not even clear that you own the property. There's different types of real estate investors out there. There's people that will buy stuff because they want it to go up and appreciate, and they want to get rich and all that stuff. And that's all great. But the challenge with that type of mentality is you speculate, right? Like, you invest in places where you're basically hoping that everything goes right, and like everything keeps growing and everything keeps expanding. And amazing, that's great. That's what you want. But if that's your like sole investment strategy, like, I know guys that buy in big downtowns and they want to put up these flashy buildings and all this stuff. That's cool, but what if the economy turns? What if like interest rates go up? What if all the things that are happening start happening? Then all of a sudden it's not a game anymore. It's not fun. My point is that for whatever reason, I was always drawn to investing in like the blue collar, steady Eddie stuff when it comes to real estate. Like, I'm happy to take risk in like my business and like grow the business and invest in marketing and sales and production and development and all that stuff. But like, when it comes to the actual like business of investing, I'm a very conservative, very cautious person. I'd rather invest in places that have just steady Eddie, long-term, 20, 30 plus year fundamental growth projections, because I look at real estate like an entrepreneur's savings account. You know what I mean? Like, that's where an entrepreneur, like, they make their money, or a doctor or a dentist, like, they make their money, they make a couple $100,000, make couple million bucks, whatever it is. And it's like they've traded their time for money. They've got some money now. So, they're not going to go throw that money into, I don't know, a speculative, I don't know, ground up development in halfway around the world in a country where it's not even clear that you own the property, right? Like that's just, to me, that's not smart. At the same time, you also don't want to be too conservative, where you put your money in a savings account and get 1% and you get hammered on inflation and all that stuff. So for me, with the kind of real estate that I look for, I look for, well, first of all, there's three things as far as the market goes. So number one, I look for net migration. So in other words, are people coming or going into a market? That's literally the telltale sign of any healthy, sustainable long-term market. Because if there's no people, there's no need for real estate. Real estate is for people. So, are people coming? Are people going? And actually, to that end, there's a lot of guys that send me deals in places like Detroit and places in the Midwest. And they're like, hey, we can buy this building for 20 grand a door, 10 grand a door. City's basically giving this away to us. All we have to do is pay the taxes and catch it up. And it's like, okay, cool. But like, who are you going to rent it to? Well, what do you mean? Like, literally, who are you going to rent this place to? There's nobody in this. There's people there, but they're not staying. They're leaving. Rents are going down. Labor is getting hard to find, because if people are leaving, the trades are leaving, people with talent are leaving. You just have so many different problems. So net migration for me is number one. Number two is the reason for net migration is always jobs. Most people move because of work. Like, literally, they need work. They need a place to work. And yeah, the whole work from home thing is great, but at the end of the day, a lot of that stuff's coming to an end. Plus, a lot of people work with their hands, trades, contractors, teachers, firefighters, doctors, dentists. These people all working in person. People working in Amazon warehouses, they all work in person. Are the jobs driving the net migration? That's a really big piece. Like, where we're driving right now in Houston, but there's like 12 lanes right in front of us. Literally, it's 2, 6, and then wow. So this city, this market, Texas, this state, net migration is insane. And the reason for it is because of jobs. You've got so much incentive to build a business here, so much incentive to live here. Affordability is great. I'll talk more about that after. But again, jobs. Where are the jobs going? And for me in particular, the kind of real estate I like to do is I want to find those long-term sustainable jobs. I'm not talking about the kind of jobs where a bunch of guys with laptops show up and they make 200 grand a year. And they're very talented coders, programmers, whatever it is. But the thing is, those are the jobs that are the most fickle, because at the end of the day, that company says, hey, we're downsizing, or hey, we're doing this, or hey, we're doing that. There's no infrastructure. All they have to do is just close the laptop and they're gone. Whereas markets, like when I used to invest in Canada, I loved Winnipeg. And the reason why I loved Winnipeg was you had massive ingrained infrastructure into the economy. You had the massive trucking industry, logistics, you have low cost of living. Like, it's just, there's so many reasons why businesses wouldn't leave, no matter what they're quote unquote offered somewhere else. So in Houston, you have the Port of Houston, which is a little while from where we're at right now, but the Port of Houston is an example. 47% of the entire petrochemical industry in the United States goes through the Port of Houston. So everything from petroleum jelly to uh, oil additives to all the value add stuff, like almost half of the petrochemical industry goes through the Port of Houston. Now, if you've ever driven along the Port of Houston and you just think about what you see, you're talking about hundreds of billions of dollars of infrastructure, literally, if not trillions of dollars of infrastructure, just scattered all along the whole Port of Houston. It's insane. That is never going anywhere. Like for those of you Canadian, if you've ever been up to Fort Mac or Edmonton and you see the refineries and you see all the work there, you're like, wow, that's big. Okay, imagine that like 1,000. Like it's the entire miles and miles and miles of this stuff. And what does that represent? It represents jobs, good paying jobs that are not going anywhere. And those companies, those chemical companies, those manufacturers, they're not going anywhere. They're not leaving because they've spent billions of dollars to set up there. So those jobs, I feel pretty good about that. What else? The medical industry. You've got, whenever you have medically anchored industries, pharma, tech, all that stuff, biotech, like there's just so much of that stuff. Once they get themselves situated in an area, in infrastructure. Years ago, I invested in Memphis, Tennessee. We bought a couple hundred doors there. And why Memphis? Why Tennessee? Well, there's this little company called FedEx there. And FedEx at the time was employing, I think, 30,000 people. No, pardon me, the airport, just the airport itself was employing 30,000 people. On top of the other, was it tens of thousands of people working for FedEx directly. And a little company like FedEx, a massive company like FedEx is not going anywhere. They're not leaving. Like they chose that market for a reason. So these are the kind of things that when you're thinking about long-term staying power, again, tying back to that whole concept of kind of like an entrepreneur's savings account where you can put your money into something that's going to last. Those are the things that I look for. And then the third thing, so again, you have net migration, industry, which is jobs. And then the third thing is transportation. So literally tell me about how on the way or out of the way what you're doing in your market is, because as we sit here, we're on a 6-lane highway we got 14 lanes right in front of us here. I mean, there's still traffic. There's still traffic. There's a lot of people coming here. And so infrastructure is incredibly important. You've got the port, again, which is why Houston is such a well-anchored municipality, city here. You've got 2 international airports. You've got Hobby, which is just over there. Hobby Airport, if I'm not mistaken, is actually bigger than for my Canadian friends. Hobby, the backup airport here in Houston, is bigger than our biggest airport in Canada. So just think about that for a second. Then you got George Bush International, which I think it's 80 or 100,000 passengers a year. Like there's a ton of passengers that go through George Bush. The infrastructure is just astounding. So when you look at those 3 factors, you then read into the story of markets like Houston, you start to see patterns. You start to see why so many people are moving in. Now, beyond that, those are kind of the macro factors that I look for. But beyond that, things that really matter to me are things like affordability. So obviously, how affordable is a market for my consumer, for my customer to live there? Because you can have all 3 of those things, but if people are priced out of the market and they can't afford rent and they're paying half of their wages or 2/3 of their wages just to have a roof over their head, I mean, that sucks. That basically means that if I buy into that, I am part of that stress now. And I don't want that for my clients. I don't, that's when you have delinquencies, that's when you have impairments. It's really hard to move the rents because there's nowhere for them to go, really, unless people get massive raises, which doesn't really happen all that often. That's a big piece.